appreciate that. And every morning I wake up, it's a victory for me. I'm just happy to see the light of day today, and fortunate enough to be with everybody here today as well. So grateful for that. Vladimir, good morning. Let me just kind of open up this chat box a little bit better. Hopefully, good morning, Melissa, Terrence. I appreciate you being here. Just let's get a reality check here. You should see just the NinjaTrader website on the screen right now with some charts in the background. Give me a thumbs up. Yep. And that you could hear me okay, because we are going to start in 2 minutes. We got a lot of stuff to talk about today. Good morning, Debbie. Good morning, Neil. James, awesome. Thank you for that. David, thank you. Very, very cool. Luis, good morning. Vishal, thank you for that. Very, very awesome. Appreciate everybody being here today. Summer is finally here in Chicago. It's beautiful. Busy, thank you. Yeah, good morning. Terrence says, great time to get a mug up in 2 minutes. Yeah, 1 minute now almost. I don't know. Happy Woodens Day. May I ask what that means? Ryan, good morning. I'm not even going to Google it. I'm afraid of what might come up. But Ryan says happy Woodens Day. Fabio, I'm going to shorten your name to Fabio to make it easier for me. Thank you. Appreciate you being here. Anything I could do to help, of course, is why I'm here. Sharon, awesome. Very, very cool. It's almost 9 o'clock. We're going to hop right into this thing at 9 o'clock. We have a lot of stuff going on. Okay. So Ryan is going to, here's some factoids. Ryan says Wooden, AKA Odin, is the Norse god for which Wednesday is named. All right. So I didn't connect the dots there, but yeah, happy Wooden Day. I got it. Isn't that like Thor's dad or something like that? I don't know. What am I talking about? All right. All right, let's go ahead and officially get into this thing here. We're gonna get started, and I do want to just talk about risk really quickly here. We're talking about futures trading today. You have a high combination of leverage and volatility in these markets, which presents us with great opportunity, but also presents us with risk. So we need to be careful when we're trading these types of markets. Risk is a double-edged sword. It could work for us as well as against us. I mean, leverage is a double-edged sword. It could work for us as well as against us. So keep that in mind. Be easy on the day trade margins. NinjaTrader offers very low day trade margins. You get a lot of leverage with that. So we need to use it responsibly and smartly. If you're not sure where you fit on the risk capital curve of things, only fun with risk capital, reach out to me or any of the support staff here. The NinjaTrader brokerage sales folks, support folks, very, very, very well versed in this and very well trained. So feel free to reach out for confidential conversation anytime. I'll copy and paste my contact information here in a second. We're going to be on a real-time practice account today. And we're going to be exploring RSI more and more today. Relative Strength Index. Someone asked me to learn about it last week, so I'm learning about it. And we're going to go ahead and kind of focus on that today, along with come up with hopefully some good trade ideas. Sometimes we have bad trade ideas, sometimes we have good trade ideas. But the risk disclosure statements here, feel free to read that if you need more information, or just give us a call. We'll be happy to talk to you about it. All right, I'm going to go ahead and move that out of our way. What do we have up here? We got a lot of stuff going on today. Chairman Powell is talking in front of the. Let me just pull up my notes real fast. In front of the House Financial Services Committee, all hands on deck. This has very much been a interest rate driven, a Fed driven market, in my humble opinion. And again, this is Jim Cagnina with NinjaTrader, for those of you who don't know me. And he's testifying at noon today, Eastern time, 11 o'clock Chicago time. But text was released already, right? His notes were released, right? So he's got prepared statement. They type it up the day before. I'm sure maybe more than the day before, and they do a lot of analysis, in wordsmithing when this comes out. And so it's out now. The remarks are out, even though he hasn't started his testimony yet. And the punchline is in red here. Employment's still weak. Inflation still temporary. Remember, that's their two mandates, right? Full employment and keep a check on inflation. Those are the two federal, FOMC meeting focus, mandates, right? The Fed mandate. So that's where we're at right now. MBA mortgage applications. We talked about this last week. It's kind of been wildly volatile. If you chart this mortgage application number, it's up 16% from last week. You have these 16% swings up and down. It's been kind of crazy, but I'm keeping my eye on that. Nothing to move the needle, I don't think, right now. And then PPI also came out, Producer Price Index, which it's something to keep an eye on, especially with respect to the the idea that inflation is half of the equation here. We got to keep that in mind. So increased 1.1% in June, seasonally adjusted. Final demand prices rose 0.8%. And you could find that on the Bureau of Labor Statistics website, easily Googleable. Googleable is a term of art. Okay, for now, so that's my notes for now. Let's kind of take a look what I'm seeing here. I have a micro E-mini S&P chart on the right, 10-minute chart on the right. There's nothing micro about them. I mean, you get a lot of leverage with these instruments, and it is a smaller size contract than the bigger contract. But keep in mind, there's a lot of benefits to participating in the micro market in addition to participating in the classic bigger size E-mini S&P markets. And I'll go over all those in more detail. But I have just a volume profile, a simple candle chart, and RSI, as we promised, we take a peek at. And talk about how to use it to analyze momentum and what it is, what actually the RSI is. On a daily chart, though, I'm going to start out with what's my bias. Let me just go ahead and this is just a daily E-mini or micro E-mini S&P 500 candle chart. And, what's the state of the market? In my opinion, looking at this thing, the state of the market is bullish right now, overall state of the market. And, you see some of these, periodic, pullbacks or price depreciation, whatever you want to call it. And I just drew a simple trend channel, around, the last, 2 weeks worth of candles. And, clearly we're in bull mode still. Now, one could argue a lot of things, but one could argue we've got 3 candles at the top here that are kind of hitting a wall. Well, maybe not today. We'll see. And so I'm just going to draw a rectangle real quick here. And where's my rectangle tool? And I'm just going to highlight this area, right? And say, okay, so right now we have 3 candles worth of what I'm going to call resistance, right? I don't know if that's enough data for me to say, hey, we're hitting a top here, and this top is going to continue on for a long period of time. That's kind of counterintuitive to the trend here and to everything that the Fed is doing. So I'm pretty bullish here, but I'm just going to highlight that to keep my eye on it. So pretty positive trend here. Let's take a look at the Nasdaq. It's even more crazy. I mean, we had this price dislocation. I'm going to call it retracement. I'm not going to call it a correction because I don't think the market's ever incorrect. I think it's always correct, especially on the future side. I think, in my opinion, these markets are 23-hour markets. There's every market participant you could think of participating in these markets, and I think it's actually it leads a lot of the time. It leads a lot of the action, sets the pace for the day. And you can see here, this trend in the micro Nasdaq. If you look at the upper left hand corner, you see MNQ micro Nasdaq is very strong. It's a very, very, very bullish market. This double top here, we blew through that pretty quickly. If you want to consider this a double top. I don't know if it's kind of a funky head and shoulders pattern or whatever it is. It just didn't last, right? It did not last. Summertime rally for sure. Crude oil. We'll talk a little bit about the micro crude oil as we go a little further, but I thought it was worth a little bit of analysis here. This is the classic regular crude oil contract that I'm looking at right here. And again, trend positive. And then all of a sudden, though, starting in July, we see some pretty wild volatility. We got, some pretty big candles here, and I'm just going to go ahead and use my mouse to get the stats on this candle, high to low here is 4 points or 4 handles. That's $4,000 move right there. So it's pretty big per contract. So that was kind of a big candle. And then you kind of see, all right, now we're fighting back. I highlighted this resistance zone, and I just want to notice this top wick here. This top wick is pretty impressive. The other thing that I'm taking away from this rectangle that I drew here, this area, this resistance zone, maybe, I don't know, that's what I'm calling it. And again, that's my opinion. Is we haven't closed in this area for 1, 2, 3, 4, 5, 6, 7, 8, 9 different days, right? So this is a daily chart. We can't close in there. So again, it's kind of lending credence to my idea that, hey, until we close in this area, I'm not going to shift my resistance area up. Now, this is a supply and demand market, of course. So we're going to have we have a government report coming out today in a little bit here. That could be a market mover, and maybe it's not. Maybe it will be. We'll find out. But right now I'm thinking this is a really nice resistance area in crude oil. All right, so let's kind of get to the main event here, and let's see what this the 10-minute chart. I have a 10-minute chart. I got the micro E-mini S&P up. I have the volume profile on the left-hand side. The dark part of the volume profile is the value area. The light part of the volume profile is called prices below value. We don't have a light at the top yet, so there's no prices above value. And the point of control is right across here at 79, 43.79. That's the longest histogram bar for the volume. We'll talk more about that as you have questions on it as we go. The only other thing I have here is the RSI. Excuse me, the RSI study that we're going to kind of look at in detail today. But let's go ahead and analyze the candles here. And I'm going to get my crosshairs out. If I'm talking too fast or you have questions, stop me. Pretty decent sized candle here, 730 bar here, closing at 740. A pretty significant candle up. I'm going to call this my benchmark candle now. So I think that may set the pace for the rest of the day, at least until we see something contrary happen. And then we have a couple of equal opposites here on the open, 830, 840. These two things are equal and opposites. You put them together. If you use your imagination and you were to shuffle the deck, right? Just shuffle these two together, you're going to get a doji-like formation where the open and the close are nearly the same price, and you'll have a pretty big wick on top. So that's telling me kind of, hey, market happiness. Sellers came in to kind of get us back down to the point of control, and now we're kind of fighting around the point of control. We're trading around the point of control. Which is kind of a good thing. So again, I'm looking for places to buy today. That's consistent with my bias, overall bias. What's going on today? And we have until 12 o'clock really, or 11 o'clock Chicago time, until Powell starts testifying in front of House Financial Services Committee, which could generate some kind of weird volatility. So we got to be careful. Make sure you have your stops in place, best practices. Leanne asks, why use the MES for analysis when the ES contract provides more information like volume? Well, I hear you. I think they're very similar, but I'm using the MES right now because I'm considering my scaling in options, and for depending on your account size, it might make more sense to scale to a position or scale out of a position with the MES. That's why I'm using that today. You could, depending on your account size, you could do the same thing. But if you overlay the volume profiles on both, it's going to be really similar. I mean, it's not going to be totally out of whack. There's depth and there's liquidity in the MES, but and that's why I have it up here right now. And we could toggle over to the regular ES and kind of look at it real easily on the NinjaTrader software. You just use your drop down menu and do that. But let's stick with this for now because we have a limited amount of time here. It's 9/11 already. Haven't even considered a trade idea yet. So a couple of areas of interest here. Market weakness on the left-hand side, right around here. And let me just kind of, I'm just going to draw like a little ellipse to show you what I'm talking about. So right in here, I'll move it over a little bit. I know it's blue on blue. You see low volume, right? This is market weakness. So right now we have a double distribution, right? We have a lot of volume down at the bottom that happened overnight, and then the more contemporary recent volume on the open happened on the top. And in the middle is market weakness, right? So right now I'm going to consider this a double distribution, and I'm going to say, hey, once we opened up for business this morning stateside, the paradigm shifted. point of control shifted. The volume is kind of moved up here. But this market weakness area means, buyers and sellers didn't spend a lot of time there, right? The market kind of cruised through there quickly. And you could see it on the candle. So the million-dollar question is, will this fill in completely to kind of complete the volume profile? And, sometimes it does, sometimes it doesn't. But my guess today is it won't. And again, that's just a guess. That's just my opinion. William asks, is there ever a 101 level of this? The graduate level conversation is entirely over. I apologize. I'm going to go slower. I will. Yeah, it's one of these. I'm going to go a lot slower. I apologize for that. What we're looking at, and William, me and you could talk more later. I can direct you some resources to kind of get your footing in starting. But this is a market like any other market. There's a price associated with the market. It goes up, it goes down. We want to buy low, sell high, buy low, right? And so I'm just forget about all of this volume profile terminology for a second. This is just showing us where buyers and sellers, exchanged, did a trade, more so than less so. Right, where people are more engaged to trade over a period of time. This is not time sensitive in terms of a candle, but it's cumulative throughout the day. And then the RSI indicator is an oscillator. We're going to talk more in detail about that. But I do want to get a couple trade ideas because I'm looking at these candles right now, and I'm gonna go ahead and draw another rectangle. And what I'm trying to identify is areas of support now, right? So we haven't traded. 1, 2, 3 candles. We haven't traded in this area yet, right? So it's called, right now it's kind of contemporary or short-term area of support. Could we break through here? Pretty easily, for sure. But it's worth noting. And the last thing I'm going to do is I'm going to add a Fibonacci retracement here, and I'm just going to kind of eyeball it. It's not going to be exact, but it's going to be close enough for government work. And I'm going to come down here and just apply high to low the Fibonacci retracement. And I'm going to go ahead and just right click to edit it a little bit on my properties. It pulls up this little dialog box, super cool. Click on here. I'm going to get rid of the 23.6%. I don't like it. I'm going to get rid of the 76.4%. I don't like that one either. 0, 38.2, 50, 61.8, and 100. I'm going to stick with that. I'm going to hit OK. I'm going to hit apply. I'm going to hit OK. And there's our fib line on the right. Hopefully you can see that OK. Terrence, this is recorded on the NinjaTrader YouTube channel, but after the fact. Okay. 61.8% is pretty far away, but it's a good target. 50% really far away. It gets us right back where we started from at 730. Another good target. And 38 is kind of far away. So right away, off the top of my back, what I want to see is penetration into my cloud here, into my area, my rectangle area here, support. And so I'm simply going to right click, and I'm going to place an order. Right, I'm going to buy one at the market at 43.74 1/4. And you could be more precise if you want, but for demonstration purposes, I just kind of want to get a trade in right below the low, right? A lot of times you're going to see these areas of support and resistance. You get penetrated, right? Temporarily, sometimes permanently. A good example of that is this particular chart right here. I mean, this is a daily chart, so it's a little different, but we penetrate the area, we come back down, sellers push the market back down. We penetrate, sellers push the market back down. We penetrate, sellers push the market back down, and so on and so forth. So that's kind of the phenomenon here for order entry is be patient, let the market come to you, and then maybe you'll pick up a position with the benefit of 3, 4, 5, 6, 7, 8 ticks, or a better price. Basically, you can maybe get it at a better price. So that's kind of order entry number one. And because it's a micro, I want to end up with a multi-contract position, right? So I'm going to put another one in as we approach the 61.8%. Again, I'm going to right click right at it, and I'm going to kind of line it up with my volume profile here, and I'm just going to go right click. And then I'm going to buy another one. So what I've done is, if this were a live account, it's not, it's a simulated account, real-time simulated account. This order here would have been sent to the exchange. this order here would have been sent to the exchange, and it's sitting at the exchange waiting, right? It's waiting for a seller to say, yes, I want to sell you this contract at this price. Now, the market's trading way above that, so that's not going to happen until the market gets to us, right? So we're going to be patient. We're going to wait, and we're going to see what happens here, and we're going to talk about it. It's 9:17. We're going to have another bar formed in 3 minutes. These are 10-minute candle bars, right? Candle bars, candlestick. I get confused on what I'm supposed to call it. But Dan Graham just said, don't call it. Don't call it a candlestick. Call it a candle. It's like, okay, it's not a candlestick. It doesn't hold the candle. It's actually the candle. But in any event, so this order here is sitting here patiently waiting to get filled, right? So, and this one's patiently waiting to get filled. And we might change our minds. We might add to it. We might subtract to it. But we're trading right at the point of control right now. And we're going to be patient. We're going to see what happens before we make any other decisions. So, okay, so Terrence, my fib line, so I just kind of visually did it. I just picked the high of this move, right? 43, 84 and a half. And then the low, I drew it to the low. And let me just kind of move the chart up so you can see it better. That happened, around between 1 and 2 in the morning here, this area down here, right? So this should correspond to that number. And I'll get the crosshairs out to see how, inaccurate I was. It's pretty close, right? So here's the low and here's the high. And it doesn't really matter if you go high to low or low to high because these percentages are the same. It'd just be inverse, right? 61 would be 38 and 38 would be 61. But that's the picture I took. Now you could do a more contemporary volume profile and say, hey, I just want to do this from the open, or from when 7:30 candle when all the action happened, right? 7:30 we have the economic releases and stuff happens usually at 7:30, an hour before the cash market opens up here, and so that's a legitimate place also to draw a fib line. But it gives you a much tighter Fibonacci area, and it would be more finely tuned to folks that are looking for a shorter duration trade, right? Maybe you're going to have a 2-minute chart up or a 5-minute chart up, and you want to get it in and out faster. So that I like to take a longer term view, take a look at the whole field. I want to see where all the players are, and then I could kind of decide, hey, what do we want to do here? Again, this is totally my opinion. This is totally how I look at it, and it's not the answer, right? There's other opinions and other methods. So, Ellen, I think you do have to, Ellen asked, let me read it out loud for those who can't see the question. When you trade, do you always take into consideration the candlesticks pre-market, or do you focus more on live market action? Or it depends on the situation. Well, I think I like to look at the whole field. Like I said, I like to look at everything. Now, we made a big mistake a couple of weeks ago, and I'm going to show you what that mistake was because it's right on point to your question. Right here, the European benchmark candles don't always follow through. I mean, on the day that I made this note, we had a really big red candle, down candle on the European Open. And my thought was, well, this is going to set the pace for the rest of the day. So now I'm going to be looking for places to sell today, even though the long term, the bias was bullish, right? I decided, you know what, today I'm going to be bearish for this only reason, right? For this only reason. And it backfired, right? We got crushed. It was a bad trade idea. And so I wrote it down and I highlighted it in red. And it's part of the thing. When I make my notes, and I encourage everybody to do this, it doesn't matter if you're trading futures or stock options or Forex or CFDs, write down notes when you do something good and write down notes when you do something bad. And I have a pad of paper I do it on, but for demonstration purposes, I was typing them in, and it helps. It helps you. It really helps you. I mean, I've been doing this for decades, literally, and I still make mistakes that I didn't make 10 years ago, and I correct myself, and it really helps me remember. So in any event, let's take a look at the RSI now that someone mentions it. So RSI And let me just pull over my cheat sheet here. Again, we're going to be patient on this trade. Well, at 9:30, we might change things up, but let's kind of have some notes on RSI, and let's just go over it. Notes. Okay. Relative Strength Index, it's called, right? Developed by Wells Wilder, is kind of the architect of this thing. Back in 1978, he published a book, New Concepts in Technical Systems. You can get it on Amazon. The hardcover is like $66, $65. The Kindle version or the electronic reader version is $6. Suggest you consider doing it. Actually, here's the link. And again, this is not an affiliate link. I don't make any money on this link. Just full disclosure. Feel free to check it out if you're interested in, if you like to read these kind of books. And there's a lot of these kind of books that are good to read. And this is, I would suggest this is one of them. But in any event, it's a momentum indicator and it's an oscillator. Now, a lot of oscillators oscillate around the zero line, which, the CCI is an example, MACD is an example. This particular one oscillates between 0 to 100, and that's because that's the way the math is, right? And the math is really focusing on 14 periods. That's the standard period size, and it focuses on the average gains and how they relate to the average losses day to day, or 10-minute candle to 10-minute candle, whatever period you're using over the last 14 days. And there's a mathematical formula. I'm not going to bore you to death with what that is. But that's kind of the focus of that, of this RSI. And the idea is, over 70 is considered this, this asset is overbought or overvalued. Under 30, it's oversold or undervalued. And it's as simple as that. Now, these 70 and 30 numbers have been debated since 1976. Should they be 80 and 20, 90 and 10, 60 and 40? So there's a lot of subjectivity to that. To this overbought and oversold concept. And so kind of let's take a look at what we're up against here. We're literally at 64.48 right now. And we've kind of crossed under the 70. I think crossovers are important. And if we line up the RSI with the actual chart, let's look at the 80, the 80 number right here. Boom, we printed it in 80. Now, remember, past performance not indicative of future results. This isn't always work this way. But sure enough, if you said, hey, we are overbought right now, I'm going to go short, you would have been right. You would have been right. Now, again, it doesn't always work that way because you don't really see that data till the next candle anyway. Right? These are lagging indicators. You can't formulate this. You don't know if the RSI is going to go at this point, if it's going to go up to 90 or it's going to go down to 70. Well, we went down to 70. So if you use this in conjunction with your other indicators or with your other trade methodology, then maybe it would supplement the idea it's time to go short. But again, you'd be looking at the next candle over, which still may have been a good trade. So it's the focus on the blue line, the yellow line, the gold line is an average. It's a 3 period smoothing average. I kind of ignore that, but I'm looking at the blue line here, and I want to see crosses over. And there's nothing to suggest that, hey, we still could be overbought right now. It's 64.8. I want to see some movement on this thing before I get too excited, but we'll see what happens here. I'm going to focus on my my area of support right now first. Right now, this momentum indicator isn't telling me right now what to do anymore. Let's see it move a little bit more. That's kind of what I'm thinking right now. And a lot of people do use apply trend lines to the actual RSI itself. So as an example, this might not be the greatest example, but I'm gonna do it anyway. I'm just gonna draw a trend line here and say, okay. I drew a trend line from about 3 in the morning until now, and I want to see if the RSI maintains its level above the trend line, or if it breaks on through the trend line. If it breaks on through the trend line, that could give me some information. It could tell me maybe the momentum now is negative and it is time to go short. So this isn't a really clear, crisp trend line. I mean, this one might be a little bit more appropriate. We haven't gone below this line since I drew it. So it's part of the analysis, part of something that I'm looking at. Let's pull this back down here right now. All right, any questions? What do we like? 930 bars in 4 minutes. We're going to see what happens on the 930 board. And remember, every half an hour period, 7, 7:30, 8, 8:30, 9, 9:30. These, when we hit those milestones, when we hit those, those time frames, there's a new candle starts to form, which means old candles now are painted on the screen. They can't change anymore. And as a result of that, we have new information. We have new open, high, low, close data for the previous candle. We have new volume data for the previous candle. And a lot of trading systems, whether they're automated, they're algos, they're electronic trading systems, or even manual trading systems, then kick into gear and establish positions or get out of positions. Rule-based systems do that more often, in my opinion, at 9:30 than, let's say, 9:27 or 9:23 or 9:19. So those periods are kind of important. And don't forget, the half-hour period also corresponds with a 10-minute period, a 15-minute period, and a 5-minute period. So all those kind of converge on the half hours. And so my only point is here, I do expect some sort of additional volume and additional momentum to happen at 9:30.
Order filled.
Okay, so now we got our first unit filled. And what I'll do here to make it easier to see, I'm going to just kind of manipulate my charts a little bit here, a little bit better. Big red candle. Let's see what happens at 9:28. I'm feeling pretty comfortable right now. Still not too freaked out. If we get a close here, if we actually close in my rectangle, then that's no longer going to be considered an area of support. We're going to have to adjust it right now, but I'm not going to adjust it until we get a close, until we get a candle close. Again, which is in a minute. So Alfred asks, Terrence, I'll get to that in a second. Well, I'm sorry, I'm missing some of these questions. How much profit could this make us? So in this particular market, there's two versions of the same S&P 500 futures market. There's the micro futures market, which I'm looking at right now. And there's the classic, what I'm going to call the classic S&P, E-mini S&P market. This micro market is 1/10 the size of the bigger one. And so that each point is worth $5. So, when this says -1, we're losing $5. When it says -2, we're losing $10 with one contract on. If we had two contracts on, you would double that, right? We'd be losing $10 instead of $5. So the bigger contract, you multiply everything by 10. Instead of a $5 point, it's a $50 point. So the amount you could make or lose is a lot. So it just depends. And one of the things that I haven't done yet here is I haven't put a stop loss in, and I'm going to do that because it is best practices. And I'm just going to put a catastrophic stop loss in here at the fib level here at 38.28. I'm just going to right click, and then it's going to be a sell stop, right? Because I'm long a contract, right? And so I want to sell a contract if I am wrong. If I'm wrong, right? If I'm completely wrong. And since it's going to be a 2 contract trade, if I get the second fill, I'm going to go ahead and just adjust that to 2. So, right now I have a protective stop down low. It's catastrophic. It's far away. I'm going to move it up as time goes on, and we'll see what happens as we go forward here. But right now, at least I have something in. It's in my mind, it's best practices. Have something in just in case. We've seen prices move like crazy for no reason at all out of the blue, and you need to be careful. So that's kind of where we're at right now. So right now we did close in let me just pull this out of the way here. You can see a little better. I'm gonna move this down. We closed in our rectangle, pretty big red candle. So far we have a red continuation candle. We're shooting for our second target here. I'm going to move this little rectangle out of the way right now, since we're breaking new ground on the downside. Okay. RSI did cross underneath my trend line. So again, So now we're looking a little bearish, but that's okay. We anticipated this. We want to get this fill right here. At least I do, on the second unit, so that we're doubling up our contract size. And that's one of the unique things about the micro, especially for folks with smaller size accounts, that you have that ability to do that. You could wait, you could be patient, your ranges could be further away. So that's why I'm a fan. I wasn't a fan of these things to begin with, because it's like, oh, $5 point. You know, why? But as you accumulate positions and you scale in and scale out, it does give you a certain amount of flexibility, even if you're doing it in conjunction with a large one, because these two contracts are fungible, and from a margining point of view, they're integrated. Scott, I'm not adding to a losing trade. I'm adding a second position right now, because I want to play a range today. It's not a losing trade until I lose. It's not a winning trade either till I win, right? So I'm identifying areas where I think that it's reasonable for the market to go. Now, if you're super conservative, you would just buy two contracts here and you wouldn't have bought the first one, right? I mean, that would be, you know, probably a more conservative thing to do. But maybe you don't get filled on this contract, and you would never get filled. So what I'm trying to demonstrate here is in the micro contracts, you could scale on at different levels, and I'm using the fib and the volume profile to do that. My bias is already established as bullish, so that's why I did it. I don't know if that's a good answer, but I'll be honest with you and tell you why I'm doing things, you know. And so if again, I'm just going to kind of look at this trend line here, kind of help me take a peek at what's going on. And we'll see if that trend line I just drew means anything whatsoever. When buyers are coming back in, you know, maybe we found some footing here. We didn't get our second unit yet. And from a volume profile point of view, we're still kind of in the meaty part of the volume profile. And when I say meaty part, you know, where all of this volume is being accumulated right up at the top here. The top distribution of the double distribution. Okay, hang on a second. I got a lot of questions I'm missing left and right here. Let me scroll back up. So Biz, hopefully I answered that question. You know, the thing about your question, Biz, if you know we're going to drop where you bought, why not sell from the POC rather than catch a falling knife? I do not know. I absolutely do not know we're going to drop. You know, I have a suspicion, and if we do drop that far, I pick up my second unit, but I don't know that. There's no way of knowing that. Brian, this is weekly. I think this is a recurring Zoom meeting, so you're going to get notices every week, and feel free to, the more the merrier, Brian. Tell your friends, your neighbors, your relatives, your countrymen, your enemies. Just tell anybody you want. You know, it's free. I mean, it doesn't cost anything. Just pop in here. I'm doing this every week. The more the merrier, the better questions. The more questions we have, the better. And not only that, keep in mind, you know, I'm not the brightest bulb in the lamp sometimes. You know, we have participants in this room that have more experience and they're smarter than me, and they point things out. And, you know, I'm humble enough to say, great, that's a great point. And let's talk about that. So that's another reason why the more people that are here, the better. And you know, I don't know, I'll stop talking about it. Alfred says, cannot wait to start trading the E-minis. Awesome. Let's see. Why would you add to loot? We already talked about that. You put your emergency stop right at the 38%, since that should be support if it gets there. This is Perry. You would be better off to put it below the 38. Yeah, no, I hear you. But this is so far away. I'm going to move it up. So what Perry's saying is, hey, a lot of times these fib lines become self-fulfilled prophecies, right? And because of that, the chances of my stop being picked off are higher. And so he's suggesting, well, let's pull it down a little bit just to kind of give us some breathing room. And I think that's a legitimate comment for sure. That's a good comment for sure. But this stop is way too low for this trade idea. So we're going to end up moving it up anyway as we go forward here. And I want to see another candle. And we got our second unit right now. RSI is still kind of hovering around 52. Not too worried at this point in time, but I will be very shortly if we keep going down, but that's okay. So Sharon, that's a great point. I didn't want to start with the ATMs today because they're a little bit more advanced for folks. we will be doing some events with the ATM. And what Sharon's referring to is automatic trade management, basically, where I could place a trade and automatically associate a stop or automatically associate a stop and a profit target with that trade, so that there's no manual. The only manual thing is the entry. Everything else is automated, and it's a powerful technique on NinjaTrader. And it's the tools to do it are very powerful. I just thought for today's purposes, we only have an hour. Let's not really freak everybody out by talking about automated trade management, ATMs, on this particular market. I think today's focus is more how my brain works and kind of what I'm thinking as I try to make a good trade. And then what my observations are if I make a bad trade. So Alfred asks, why is your stop loss below your target if you are long? Well, that's where stop losses go, right? So I want the market to go up, right? So I want to take profit. Let's just put a profit target in right now. I want the market to get up here to 43.79 in a quarter, so that I'd make profit, right? Because I bought it here and I'd sell it here. However, if I'm wrong, I want to limit my exposure to my account. I want to limit my losses, and so that's why sell stops are below. Now the opposite's true. If I was short, I sold instead of bought, then I would have my stop loss would be a buy stop above the market, right? Just by definition, that's how it works. Anyway, I am going to make this a 2 lot for now, just to keep it symmetrical, and then we'll keep going and see how we do. Does that make sense, Alfred? I want my profit target to be above my entry. Stop loss below. Okay. So now my sell order is to take profit up here. I didn't put it in before. I was lazy. I didn't put it in. And we're going to look at maybe where we put it in a better positioning, but let's just kind of wait. So no, I don't ever look. Is this Scott? Scott, I never look at tick charts. And I don't want to suggest for a second that we have tick charts here on the NinjaTrader software for sure. But it's not my cup of tea. And you could tailor your ticks above and beyond the 100, 200, 300, 400, 500, and 1,000 are here. It's just not, I just never spent time with it. I'm not, good at it. There's our folks that are good at it. I don't want to disparage it. It's certainly valid to look at tick charts, but it's just not my thing. Yeah, let's talk about volume profile a little bit more detailed in a second. You like the enemy wording. Well, thank you, Morgan. I greatly appreciate that. I try my best. That's all I could do. So Ken, the 2 lot stop, how does it protect you? Well, let's just say, I don't know, there's some geopolitical event that happens that's not planned, right? We have planned news and we have non-planned news, right? And the planned news today was, hey, Chairman Powell is going to testify. We had the NBA mortgage application number. We have the PPI number, that's a monthly PPI number from the U.S. government. Since we started talking, we had the Atlanta Fed business inflation expectations, and then the EI petroleum status report at 9:30. We just missed that, so which is going to affect the crude oil market. So those are all planned things, right? We know they're coming. There's a million economists in the world that are predicting what the result of this information is going to be, and then then the market reacts when this we know it's coming. Right. And there's things we don't know, right? There's things that we don't know are coming, and, things happen in the world all the time. It's, there's most of it's bad, right? There's a lot of tragedy, unfortunately. And sometimes some of it's good. Sometimes we get good news and the market reacts to that. So we don't know, right? So when I say my second sell stop here is catastrophic, it's to protect against that, right? Bomb goes off somewhere, or China does something, and it's and I don't want to pick on China at all. I'm just saying that there's things that happen outside the scope of our that we're paying attention to. So that's why. I don't know if that makes any sense or not, but hopefully I'm trying. Yeah, again, yeah, Renko is also a valid technical. Renko charts are different. It's also a valid technical analysis process. I'm not again. I haven't focused on those, and we could do a course on those one day, but I would have to study on them and get better in practice, and haven't got to that. We're going to talk about volume profile a little more. But Morgan's using the MACD and is crossing now, so I am short. Okay, so Morgan's short right now. This was at 936. Yeah, so the MACD, we use the MACD a lot in these presentations. I'm not using it right now, but it's a convergence, divergence kind of thing, oscillator. I think it's a good one. I think it actually adds to, it's a good indicator to look at. One of the things I don't like to suggest is having too much information on your charts. So a MACD, commodity channel index, RSI, I don't think you need all three of those. I like to keep it simple. I mean, my chart's pretty simple. I got a lot of stuff going on. I drew some lines manually and, volume profile. And, I would add a moving average cross maybe if I spent more time preparing this morning. It's easy to do. I could show you how to do that and those kind of things. So make a long story short, MACD is good. And we're going to use MACD more and more in these events going forward. But somebody a couple of weeks ago said, hey, what about RSI? And I thought I would try to become better at it and use it more in practice and figure out what it's all about. So I'm reading Wells Wilder and all this stuff. Okay, so Anjan says, when do you cut your trade? That's a good idea. That's a great question. When have I had enough of this trade? I'm using a 10-minute chart. So in my mind, the duration of this trade is an hour, right? The duration going into this, in my mind, duration is 1 hour, right? And I want something to happen within 1 hour. Now, a lot of times we're stuck in positions longer than that, which is okay. And it happens all the time. And sometimes we're not, right? So that's kind of how I look at it. If I was using a 5-minute chart for my technical analysis, it would be 30 minutes, right? So I multiply it by 6, right? So I multiply it by 6. And at 10 o'clock, the market the paradigm of the market kind of changes. It's no longer like immediately past open anymore. It's kind of midday. We're getting into midday, right? We're getting into the anticipation of the next hour, which is when Powell starts to speak. So I really kind of want to consider what's going on here. Now, a couple of options right now. I mean, we're now, it looks like we're doing better than we were, right? We're almost up to 2 points, right? We're almost up 2 points, or a point and a half. The market looks like it's, we have a nice green candle going, and we didn't close below my trend line. The RSI is kind of putzing around here. It's not doing much. It's kind of sitting around here at 50, whatever that 50.19 area. And what do we do now? So there's a couple of trade management things we could do. One of them is we could try to take 1 unit off the table, right? We could try to take 1 unit off the table, move our stop up, and hopefully we get a second unit. So that's a valid trade idea. And so what I would consider is, hey, we got a higher high right now. I want to see another candle with another higher high right now. So it's 9:45. We got about 5 minutes, right? So at that point, in 5 minutes from now, maybe we're going to go ahead and try to get 1 unit, take 1 unit off the table. And let me just kind of show you what that would look like. I'm just going to go right. I'm just going to sell one, and then I'm going to change this to a 1 lot. So in this scenario, I'm scaling out of my position, right? And that's one of the things that the micros allow you to do, right? Scaling out of a position. So we talk about time duration. When do we want to get out? When do we want to get in? So now that we're approaching 10 o'clock, my hour clock is running out. Now, again, if that's not a hard stop, 10 o'clock's not a hard stop for me. I'm willing to be patient and wait it out. But things are this trade's finally starting to take shape, right? The way that I envisioned it originally. Point of control, a lot of times acts like a magnet. It doesn't always. So I want to be on record as saying it doesn't always, but a lot of times it does. So now another trade strategy is, hey, I want to move my stop to break even now, right? I would suggest maybe we wait to do that until we get 1 unit off the table, because then you kind of got a free trade, right? You bank profit on 1 unit, stop the break even on the second unit, let it ride. If you get stopped out, so what? That's kind of another trade strategy. I learned that from Dan Grams also. I learned most of the stuff from Dan Grams. And that's it. I'm going to keep going down here. Sharon, thank you. Alfred, gotcha. I knew this. Just now, by the way, if you're brand new to this thing, I'm going to give you some links to try a practice account for free when you're ready. So just hang tight on that. I'll cut and paste some of those in. Okay, so volume profile, I promise we're going to talk about it. Let me just get through some of the stuff the rest of the stuff. Yeah, so William, that's a good comment. William has a great comment. You have much greater risk than profit target. Really? Question mark. Yeah, I think it's a mistake to look at. I think it's a big mistake when you're trading to predetermine a risk reward ratio. You know, in my opinion, is let's read the candles. Let's decide exactly where support and resistance is. Let's see where the volume is. Let's see what the indicators are telling us, and then get in the game. The idea that, hey, I'm going to go ahead and I'm going to make 8 ticks and I'm going to risk 6. You just can't apply that to, you know, the paradigm of the market changes all the time. So yeah, for sure, our stop is in the wrong spot for a longer term position. And, you know, we finally identified an area where maybe we can move it up to, and let's go ahead and do that. You know, we'll move it up to, you know, just south of this tail of this wick right here. So now we're starting to kind of close in on the trade, right? So I'm being very manual, very hands-on in this trade. But I really, really am not a fan of, hey, you know, the risk reward ratio where I put my stop and where I have my profit target isn't good enough. Now, if that's what you think, then don't put the trade on. But again, I want to see the candle. I want to see the volume. You know, I want to know what my bias is in support and resistance areas, and that's how I look at it. And sometimes, yeah, it looks like you're risking more than you're willing to make, but I'm going with the odds. And again, I'm going to move my rectangle right here. So again, I'm right south of my rectangle. I feel good about that. All right, so we got 1 unit off the table. So now what we do, what I would suggest we do, we're going to change this to a 1 lot, and then I'm going to move this again to, you know, a tick or two above our entry, so that at least we capture our commission if we do get stopped out, right? So that's kind of what I'm thinking. VWAP, yeah, VWAP's great. We'll cover that in future. We'll cover that in future events. VWAP is very powerful. It's very good. I don't use it every day, but it's definitely something to explore. Volume weighted average price, it's called. I think this is Eugene. I don't see your whole name because the chat box is too small for me to. Oh, here we go. I just figured out I can make the chat box bigger. Learn something new every day. Ken says, when your second order executed, did the entry price change to the average of the two? No, I don't think. I didn't notice, actually. Good question. We'll figure that out. But I did move it up above the existing position entry price. Alan says, algo will swamp human being in tick chart scenario. Maybe. You could be right there. Ken, thank you. Alan, the lower the time frame, the more likely one would be competing with the machine. Yeah, no, I think there's some truth to that for sure. For sure. Absolutely. I do, Morgan, I use the MACD all the time. I just, you know, someone said, hey, Jim, what about the RSI? And I said, okay, we'll start exploring the RSI. You know, that's something we would start doing. That's all. It's kind of, you know, I don't know if it's going to be a temporary exploration or we're going to do it next week and the week after, but I typically do use the MACD. So Biz says, I inverted your idea and made $47.50. I sold the point of control because it looked like Head and Shoulders, Empire State Building. Awesome. I mean, that's the great thing about being in this, and you know, with me today is everybody's going to have a different opinion and everyone's going to do something different. I don't want anyone just to follow me blindly in what I'm doing. But the idea that you're trading around a point of control and using that point of control as an area of interest is fantastic. I love it. So it's kind of moved down. And again, and then Morgan says, I got 3 points now out of short. Great. Again, I'm going with the trend, and I don't want to suggest counter trend trades are bad. It's just not my thing. Every Wednesday, yeah, Sheba, you'll get an automatic reminder. Well, you know, I'm a broker here at NinjaTrader. So Matthew, I don't spend a lot of my time doing this all day. I do my prep work in the morning, but I've been generally in this business for a long period of time. So I have my 10,000 hours in. Let's put it that way. But in any event, and again, I'm on a real-time practice account, Matthew. Just to be clear, these aren't not going to the exchange. These are simulated very nicely, by the way, by NinjaTrader. Yeah, we could do that, Biz. We could do order flow cumulative delta. William says he's always been a position trader on daily data. That's a legitimate process also. He's been doing it for 25 years. Let's see. If you forgot to change the two to one on your sell step, would you have re-entered that trade on the short side? Well, no, Alfred, good comment. You got to be dynamic about it and be aware of what your position is. In NinjaTrader software is really good at telling you, I'm long one right here. It's green, it's color coded. I'm going to move our second entry down to the point of control. We didn't quite get there yet. It's almost 10 o'clock and I really hopefully would like to complete this trade by then. And I'm being pretty less patient than I usually am, but let's try to get it out. And then I'll show you what we need to do with the stop, because again, you don't want to forget about an order that's dangling. It's not an ATM order. It's just a manual order. Okay. So we're filled. We got our second unit. And now I want to cancel this. Oops, I'm sorry. X is over here. I want to cancel it. So I don't forget about it, right? I don't forget about it. And another way to do that, when you open up the chart trader, just hit the close button on the right. Just in case, just hit the close button, just, boom, just to make sure. So it's another kind of little tip. All right. So that was successful. We're done. I'm done right now. I'm going to take a breather. And I'm not going to jump right back in. Right. I'm not going to jump right back in. A lot of times, it's okay to reset, take a deep breath, wait for another trade idea to emerge, maybe look at another market. The entry price is, let's see. Yeah. Okay. Thanks, Neil. Sorry. I was a little thrown off with the question, but the entry price doesn't change, just your break-even price. Yeah. I hear you. And that's what I thought happened. But I wanted to make sure I didn't say anything that's, I always say stuff that's kind of wrong, but I don't want to be wrong. Yeah, I'm going to show Matthew. I'm going to get to the volume profile next. Sharon likes MACD over RSI. Is there an activation rule to trigger a trade and a buy stop? This is not like equities. There's no activation rules. Your price gets there. It's the bid and ask spread, whatever it is. You don't have to wait for an uptick, as an example, or anything like that, if that's what you're asking. Mike, I don't know. I mean, there's some good auto trade systems, some bad ones. I think the problem with the auto trade systems are this. Paradigm of the market changes all the time. And unless the developer or the programmer is constantly changing things to take that into consideration, it eventually becomes stale. That auto trade program eventually becomes stale. That's my experience. All right, let's get into the volume profile though. We're almost done here, but I'm going to spend as much time as you guys want talking about this. Oops. We'll keep the chart trader on just in case we get totally motivated. So let me just kind of show you my settings here on this volume profile. And I'll show you a couple other tricks. I'm going to right click, and I'm just, in NinjaTrader, you just right click and stuff happens, right? It's really intuitive, really easy to use. But let's take a look at my indicators. So indicator list is on the upper left. There's a whole bunch of them. I mean, these are all customizable, and there's pretty extensive library here. I do have the order flow volume of the software, and here we have I've already added order flow volume profile, and you can see it on the lower left here. I've added it. You select, you add, and then it populates on the right hand side, and I could go ahead and configure this however I want, right? And there's all sorts of colors. There's all sorts. We could change. We could change the histogram itself from one tick to, I don't know, we'll do 2 ticks. So every 2 ticks, a new histogram bar would form. It makes it taller. Each histogram bar makes it taller. Value area 68%. We'd save it there. We'd save it at that. Bar and close, we're going to keep it there. Volume, we're going to base it on volume. Standard, we could change it to buy and sell if we want. Let me go ahead and do that. And what it'll do is it'll show the volume profile. It will show the volume profile. Sometimes it takes a minute to populate, guys. Sorry about that. Sometimes it takes a while to populate. I think there we go. All right, so it shows the same histogram bar, the same total volume, but red is the volume that was traded on the bid, and then green was the volume that was traded on the offer. I think that we're too deep in the woods on that concept right now, but you can do it for sure with NinjaTrader. So there, like I said, there's a lot of different things you could do. You could add the numbers, the actual volume numbers within each histogram bar if you want. But this is just, my basic setting is pretty much this. Yeah, you could do split sessions. Great question, Leon. You're officially my co-presenter of the day. Thank you, Leon, for that. So I'm just going to right click and I'm going to show you what he's asking. I want to look for data. Let's see, where's that? Drawing tools. And then drawing tools populates a side menu here. And again, order flow volume profile. I see it here, right? Right click, drawing tools, order flow volume profile. And now I could select a range. I'm just going to randomly select a range. And it populates the volume profile just on the candles that I wanted. Super cool, super convenient, especially if you're doing, here, let me show you especially what I'm thinking. If I just want to do, okay, from the 730 number over, oops, I'm going to right click. We're going to go to drawing tools, order flow. I want to go and just go, hey, this is pre-market to now. Here's what the volume profile looks like for that part of the day. So it's kind of helpful. It's very helpful, and I do use this a lot. Okay. Sanjay says, is there level 3 data available from Ninja? I don't know what level 3 data is. You could have top of book, or you could have 10 ticks deep. Alan says, this is the first time I'm attending the event, though I've been using NinjaTrader for a decade. Thumbs up. I love it. Love to hear that. Your comments are very candid and to the point. Looking forward to it. Thank you, Alan, for that. Very kind of you. And I appreciate you being here. Could that trend line on the RSI become a resistance on the back kiss? Yeah, for sure. I think I hear you. I think all the trend line ideas I think are valid on the RSI. And I think what Biz is saying is sometimes support becomes resistance, right? Sometimes a support line then just pivots into a resistance line, and he's saying, could this be considered a resistance line that we're going to bounce off of as we go forward? And the answer is absolutely yes, in my opinion. I think that's great. And great comment. I think that's a valid thing. Okay. Whew. Let me put in a couple links here for everybody. We're at the hour marker. I need more coffee. It's the bottom line. Let me just start out with, I'm going to give you my phone number, my direct phone number. Feel free to reach out to me. Give me at least 30. No, actually, you're going to have to give me an hour and a half because I do have to run an errand after this. So hour and a half, rest of the day, anytime tomorrow, next day. I'm not here on Saturdays. That's my direct line. Feel free to call me for any reason, any trading related reason. If your dog has an ear infection, you can call me for that too. I got a dog with an ear infection. All kidding aside, feel free to reach out to me anytime. David, thank you so much for that. I really appreciate you being here and your kind comments. Email address, reach out to me directly. Now, a couple of really important links. When you're ready to try a practice account, 14-day free real-time practice account, that's where you go. That's the link you go to fill it out. For a live account, you're ready to go. You're ready to fund a live account. Here's the link to do that. And remember, it's risk capital. Trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oh, you don't see the links. Okay, hang on a second. I'm going to make it this way. So keep that in mind. But having said all that, if you want the funding level to get started for a micro account, is $400, right? And obviously, folks fund with a whole spectrum of different levels of risk capital. Everybody's unique and different in this world, and I get that totally. If you're not sure where you fit on the risk capital curve of things, and you're just like, hey, Jim, I want to fund this account, I'm not sure how much, call me. We'll have a confidential conversation on it. I've been sitting in this chair, futures brokerage chair since 2001. And, my background goes way back further than this. So I've seen a lot of things, and hopefully I could be helpful in some sort of way. Okay, awesome. Thanks, John. Appreciate that. Keep it coming. Keep it rolling. Invite your friends, again, your neighbors. You don't have to invite your enemies. I was just joking about that. Finally, I want to leave everybody with this. Be safe out there and be good to each other. Take care. Have a great day.